they're going to say they were very happy that they purchased in this marketplace. Home buyers won this year. They got increased amortization schedules. They got higher cap limits on CMHC, lower or reduced transfer taxes. Like first-time buyers were really the winner. Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow. So does anybody else out there look at 2024 and ask, is it the year that the real estate market just couldn't get started? Kind of felt that way. And between the fact that the market never really fully picked up by the end, plus the fact that, well, the government intervened in more ways than I think anyone could have possibly imagined, it almost feels like 2024 is going to be 2025's kickstart. But to really understand what actually happened this year, I think we have to rewind it back to even 2023 and the first quarter of the year to get a full breakdown of what's happening and why this year's big events and small events are going to set up for a really interesting 2025. Now, whether you think 25 is going to be absolute crazy or not, that's something I'd love to hear about in the comments section below. But my understanding, my interpretation is that everything that happened this year is really going to set up for a really interesting roller coaster of 2024. Now, this is going to be part one of a two-part series. This part is going to be a look back at 2024 and how what happened this year impacted the real estate market and what's going to happen as a result of that. And the second of the two-part series is going to focus on 2025 and my not just predictions, but suggestions about how what happened this year is going to impact next year. So stay tuned if you're interested in understanding exactly what happened and you want a full recap, because I'm not just going to recap it, I'm going to break down the specifics of how this could impact the marketplace looking forward. Now, if I look back at this year and what's gone on, let's get a little back in focus here. Holy crap. So as we look back at 2024, what a crazy year. I mean, at the end of 2023, we had one of the lowest real estate years in over a decade. 2023 was absolutely terrible as it relates to real estate transactions. Nobody was budging in the marketplace. And we had record high interest rates at the end of 2023. But a funny thing happened. Towards October and November of 23, the bond yields started coming down. And they came down pretty significantly, yet the interest rates themselves did not come down. But because they were sliding down, virtually everybody predicted in 2024 that fixed rates were really going to start to come down. And the market was projecting that by the second half of this year, we'd see fixed rates in the low fours or even threes in some situations. Now, looking forward, of course, some of that's happened, but it's interesting. If you take a look at how this year mapped out, it's almost like the first half was a precursor. So if we're talking specifically about interest rates, let's stop and talk about January and what actually happened. Well, what happened actually is we saw the bond yields continue to rally for the first quarter of the entire year. In fact, the bond yields, the 5-year Canadian bond yields, which impacts fixed interest rates, fluctuated all the way up to about 3.8%. So if you're going to look at a graph there, it actually hit at the top of the range, 3.8% in the first quarter of 2024. What year are we in? Oh my gosh. And actually as high as 3.9 I'm looking at it right now when you're looking at May, but I'm thinking back to about February, the first part of the year. And this was a really interesting occurrence because in January, as I mentioned before, it looked like everything was coming down and the market just took off. And that really had a massive impact on two key areas of the marketplace. The first one was renewals. People were coming up for renewal and they were starting to come up for renewal, and they were expecting these low rates, and they just didn't transpire in the marketplace. And so in the spring, due to a lack of low rates and just genuinely speaking, not a lot of competitiveness in the marketplace, there was a huge amount of banks battling it out for little tenths or 15 points of an interest rate, which is funny because it wasn't until the second half of the year that there was reporting around rate wars and bank wars, which again actually happened in the first quarter and the first half of 2024. A big part of that being, of course, as I mentioned, the bond yields hitting 3.8, 3.9%, which was reflected in interest rates in the 5.5% range. Now, another interesting thing that happened in 2024 was the first quarter of the year, the first half of the year, there were projections that the BOC was going to start cutting rates. And obviously, as you may know, they did not cut interest rates until the second half of the year. In fact, Q1, they held rates at 5%, continuing to put a lot of pressure on affordability. This worked its way into the real estate market because, as I mentioned, there were, believe it or not, contrary to what a lot of people believe, there were a lot of people getting out there, getting ready to get started shopping in January. And it was almost like a little bit of a tug of war between buyers and sellers trying to figure out who's going to act first. And in the low stages of February, there was such a scarcity of supply. There was such little supply out there. And it seems like people forget this. There was nobody selling their property. And we actually had a significant amount of multiple offers in January and February, more specifically, and even into early March. A lot of people forget that. I was actually involved in that state time because not only was I helping clients through this process, but I was actually actively shopping for a home at that time too. But nobody was budging there. And it's almost like April of 2021, a pin could have dropped. Nobody was buying anything. The market just went to a complete halt and everything just sat back and waited. Where normally we'd have a pretty typical spring market, well, most people out there were basically saying we didn't want to get shopping, or we don't want to get shopping until we see the BOC start cutting interest rates. Well, that didn't happen for a few months later, which had an interesting impact in the marketplace. Now, while all that was happening, if you're listening to this and you're BC, you remember a significant announcement in January. Well, I don't think it was actually January, but I believe it was actually in April. My apologies. In April of 2024, the BC government announced a significant change to expanding the property transfer tax exemptions for first-time buyers and new property owners. Now, this was a huge change and massive change. And I still don't think a lot of people even know about this significant change. It was the first time they'd done so in over a decade, made any changes to the property transfer tax guidelines. Actually, I think it was 2015 when they went from $500 to $525,000 exemption. But it was the first significant change because what this meant was that if you were purchasing a new property, or as you were purchasing any property, as a first-time buyer now, you had an exemption up to $835,000 instead of $525,000, and then it went from $835 to $860 for a partial exemption. This could save you $8,000 because you were exempt on the first $500,000. This really opened up a lot of options for first-time buyers, which, although it didn't play itself through the market right away, over the course of the year, we've seen the impact of this particular rule change. Now, the second one, which a lot of people didn't really recognize, was the fact that new homes, and this is a big one because the government's really pushing the new homes right now. New homes became exempt to transfer taxes up to $1.2 million for anybody purchasing a property. Now, there is an exemption range from 1.1 to 1.2, but again, new homes were previously only exempt up to $750 with a partial exemption up to $800,000. And so giving a comparison, like that's a huge amount of money. I mean, on $1 million, we're looking at property transfer tax of essentially $23,000. Massive savings for people out there as it relates to getting the marketplace. Now, the suggestion from the provincial government was obviously property values have increased and they wanted to get new properties moving and starting to rotate into the marketplace. Ultimately, what I think it really has meant is it's kind of pushed the pace of the first time buyer market from that 500, 525, which really didn't help very much anybody outside of Langley, especially if you're in BC. So if it was Langley and East, it helped you. If it wasn't, it didn't help you at all. Or if you're in Victoria, it didn't help you at all. And I noticed a significant uptake and a significant amount of people that were interested in the market when that happened. Now, that was the first of a trend of activities that have really pushed the pace of this year. Now, again, I'm not saying that the real estate market has blown up, but in terms of the trends that have occurred this year, that was a significant one because one of the trends for 2024 was a return. I don't care what you have to say. This is anecdotal evidence, and I'm sure it's going to come out in some reports, but it was the return of the first-time homebuyer. And I've witnessed that specifically in the last quarter of 2024, which I'll talk about in a little bit, which resulted in some significant shifts in the marketplace due to some rule changes. Now, let's rewind back. January of 2024, oh my gosh, get my years all mixed up right here. From January till March, again, the movement was there from March till about April, May, it was as dead as you could be. We saw property values dipping. We saw people unable to sell their properties, and there just wasn't much of a marketplace. And it wasn't till June of 2024 where the BOC finally decided to step up and cut the overnight rate. Little old 0.25%. Now, while a lot of people out there were suggesting at that time they should have cut rates by 0.5% or even more, it was a 0.25 point. And the thing was, I know this for a fact because being in the mortgage industry, we knew that right off the bat that wasn't going to do much. And honestly, even though the psychology of the BOC rate cuts does have a bigger impact than the actual cuts themselves, the fact that it was only 0.25%, I think almost hurt the psychology as it relates to real estate. And you saw a lot of people who might have jumped into the marketplace say, no, that's too little, and I'm going to wait a little bit longer in the marketplace. Now, the interesting thing is the implications, as you know, for every 0.25 point rate cut, that's like $15 per 100 grand. But there were so many families that were still in a position whether they're overstretched because of those variable rates going up. Now, that range of time between May till about June of this year was very quiet, except for a few different places. First and foremost, there were people coming up for renewal. There were people looking to refinance, and we were starting to see some cracks form as it relates to people's finances. Now, this is the first time that I'd witnessed any significant quote unquote cracks. We saw people coming to us that had renewals coming up in that time frame that were unable to qualify because of the rules at that time. A little bit more on that later in this episode. But yeah, they were unable to qualify, or they had significant debts, or they were really just trying to figure out how to put themselves into a better financial position, despite the fact that the rates were starting to come down. Oh my gosh. Now, what's interesting about that is around this time was the first signs of an announcement from OSFI to say that they had updated the mortgage stress test to allow for one of two things: borrowers qualifying at a fixed rate to use a lower qualifying rate. Now, again, this announcement or this conversation around that time excited a lot of people. But one of the problems, which again, we'll talk about because it's coming up recently, is that they didn't announce when the changes were going to occur, yet that they were going to occur in the fourth quarter. And so you had a lot of people that were coming up for renewal or refinance, and maybe they could have benefited from these stress test rules, but they had to renew before this occurred. And for a lot of those folks, obviously this didn't help out anybody for that matter. Now, July through September started to breed a lot of optimization. Now, if you don't remember, in that end of summer range, actually, it was in September. If you don't remember, in September of this year, the aforementioned and former finance minister, Chrystia Freeland, announced a 30-year amortization change and a $1.5 million CMHC price cap, which was massive. And I can remember actually hearing that news, and I had to stop, pull over, film a video, and post up as quick as I could because it was so significant, or at least it looked like it would be such a significant change, and something that, quite frankly, has most likely been asked for the better part of a number of years. And it was an obvious change, but there were a few issues with it. Number one, the 30-year amortizations were only available for new build properties and nobody else. And the $1.5 million purchase price point had so much ambiguity. Nobody understood what was happening as per normal government guidelines and rules when they're announced. There's no FAQs, no worksheets, no nothing. It's just, we're going to go to $1.5 million price cap. So we're trying to figure out, is it 1.5 with a 30-year amortization, without it? Can you transfer a mortgage? Can you not? And some of those questions have been answered today. And believe it or not, some of them haven't. But when that happened, we saw a significant dynamic in the marketplace. Now, I've kind of fast forward on a few key things because the summer of 2024 was actually, believe it or not, depending on where you were, almost a summer of optimism. The marketplace took off a little bit late, the real estate market, depending on which cities or communities were, where you were. Specifically, as it relates to single family homes, started to move in the Fraser Valley and the Vancouver area in the second half of 2024. and into the fall market. But what was noticeable was the interior markets were starting to suffer. We saw more and more areas like the Okanagan and the Kootenays having dreadful sales and seeing property values dip, not necessarily because people were paying less, just because nobody was offering anything, yet there were tons of properties available. And so it was firmly planted that it was a buyer's market, yet there were many people out there who were not able to buy a home because sellers were not judging. So the tug of war began. Now, during that time, one of the other big trends of 2023 actually carried over to 2024, and that was the amount of people that were leaving Vancouver and the lower mainland for different areas and greener pastures, specifically Alberta. And this is like something we should talk about in an entire episode of why people are moved to Alberta and what they're getting there and what to avoid and what not to get there. But I must have dealt with this year. Last time I counted it, we were over 40 transactions from people leaving BC and moving to areas, specifically Edmonton this time around, and less so Calgary. But we did see some people purchasing in smaller communities outside of Edmonton, outside of Calgary, Red Deer and Okotoks and areas of that nature. But the vast majority of people this year, if I had to guess off the top of my head, 3/4 of those people were moving actually right to Edmonton and looking to purchase properties there, which is interesting because Edmonton and Calgary were the only two markets in the the west of Canada, I guess, where they were experiencing high volumes of real estate transactions and things like multiple offers on a regular basis, all the way up to the end of Q4, outside of places like the Maritimes. That trend continued, and we saw that trend continue also as it relates to real estate investing. A lot more people were starting to become open-minded as they saw interest rates coming down, as they started to see buyers come down. And in the second half of 2024, we saw more people from BC looking to liquidate their properties, specifically like condos and other investments that were not cash flowing positive anymore, and not necessarily just sit on that money, but move that money into places like Alberta, like Edmonton, like Calgary, and commercial, residential. But the most common properties that I was seeing were things like multifamily units and multi-unit single-family dwellings, such as houses with suites or duplexes with suites and so forth. And I don't know that we'll see that trend stop anytime soon, but it's certain that this trend is one that carried us through most of the investment space in 2024. Now, speaking of multi-unit families, another massive trend in 2024 was to convert. A lot of the developers stopped converting to purchasing and building condos and units for sale and made the switch to selling and switch. Sorry. A lot of these developers made the switch in 2024 to stop actually selling condos and convert them to rentals for apartment buildings. This was pretty significant, and we saw this all over the place in specifically BC, other parts of Canada. A big part of that was are the financing options with things like MLI Select, which is a fantastic financing program for people to be able to finance up to 90 to 95% if you qualify of a commercial multi-unit family property. Now, that was happening at the same time as we just started to see the cracks form in a lot of these condo developments that were coming up for completion in the second half of 24. So I want to separate the two really quickly here. The results of all of these condos that were sold in 2020, 21, and even 22, now just coming up close to completion, while at the same time the marketplace completely stopped eating up condos and there were more properties built and there were more up for rental, has completely had a massive impact on not only the values but the rental values, which is another trend that we've seen in 2024. The rental value changes because of the fact there were so many of these units. And in some cities, namely, if you look at a graph in BC cities, one of the biggest hit cities was actually places like Kelowna, because Kelowna also dealt with, unsurprisingly, one of the most significant negative impacts of the changes of the BC guidelines and rules around short-term housing. You had enough yet? Short-term housing changes. Yeah, those were announced in 2023, but it wasn't until May of 2024 that cities and areas like Kelowna and Victoria, among many others, started to feel the repercussions of no longer being able to Airbnb a unit that is not your primary residence. That was massive. And what that did is not only did that negatively impact the value, well, the values were already impacted back in November 2023, but it continued to negatively impact the value of condos all across BC, but it also had a significant impact over the next 6 months, eventually to well, hotel prices, but aside from that, the demand and cost of rent. Now, I think the BC housing minister would be really excited and say, "Hey, the primary reason that we've seen rent rates start to come down in the last quarter of 2024 is all because of these short-term rental rules." Well, that's complete bullshit in my opinion. I think the reality is that it was one of many situations around that, but actually, I think a more significant reason for that was, quite frankly, the fact that so many of these condos were built and most of these owners were not able to flip these condos or sell them. And because they weren't able to flip them or sell them, they had to rent them. And when you get hundreds and hundreds of units in a neighborhood up for rent at the exact same time, it's going to continue to force the rental rates down, no doubt. And so it's interesting to kind of look back at what's happened and what's changed over the course of the year, because all these things have kind of impacted itself. And the condo buyers, or not even just in BC, but obviously Toronto has been well publicized, have been absolutely decimated in certain areas. And more specifically, if you're talking about rental rates, that's been specifically coming down since about September, actually, of 2024. I mean, myself, I experienced this where I was renting out a floor of a detached home that, quite honestly, would have rented out for about $500 more literally 4 months before that. And then here we are in September, and it's renting out for $500 less with less demand. Although, at that point there was quite a bit of demand, but $500 a month is pretty significant when you look at your bottom line in terms of your cash flow and opportunities to get into the marketplace. So the rental amounts and rental rates have been significant, and it's not only the short-term rules, but it's the condo market, and just genuinely speaking, more people not being able to sell and deciding to convert their properties into rental properties, basically making it work out very well for renters, which we're all for. But one of the other things that happened this year is the BC government also came out with this whole new list of renters regulations and rights. And honestly, I'm not going to get into this too deep today, but a lot of landlords in BC have honestly just become sick of it and decided that they don't want to rent out their properties in BC. And so I think you'll see just this mass glut of properties come to the marketplace as soon as people can sell them, which is going to reverse the benefit for renters that they've received so far this year going into 2025. Now, let's look at what's happened this last quarter and kind of like think about the future implications of some of these things. Now, if I think about the future implications, I mean, first and foremost, let's talk about the bond yield. So we saw this bond yield rally where, again, going into the beginning of 2023, the market went down, started shooting up in the first quarter on the backs of a variety of different things. But the first thing to keep in mind is the banks were as competitive as ever. And one of the big reasons for that was because it was the beginning of the so-called renewal wall, and the market really jumped in. And I've been doing this since 2011, and I'd never seen banks be as competitive as it relates not just their existing renewal clients, because they were very competitive there, but they were also competitive with trying to continue to scoop up other banks' clients, offering rates that I hadn't seen publicized or advertised or anything. And that was going on basically from April until sometime around the middle part of the summer, maybe even the end of the summer, where each bank, it just felt like it was a race to the bottom. Do I get this rate? Do I get that rate? Do I get this? And it was just nonstop all across the board. Now, what's interesting to note is that in this last quarter of the year, although it's more public that people are talking about these rate wars, it's less pronounced, and I'm not seeing it nearly as frequently as we've seen the bond yields kind of rally back up on the backs of government spending and a US election and many other things. Now, looking into 2025, many banks have publicly stated they're going to be very competitive, but it'll be interesting to see, because one thing that I know will most likely happen in 2025 is there will be a significant amount of overwhelm. Whether it's bank turnover, whether it's because there's just so many people going through renewals, there are going to be a lot of people slipping through the cracks. And I've already seen it across the board, seeing it where a bank probably could have retained a client, but their service and experience was so awful, people were ready to move on and go somewhere else. And now, as a broker, ultimately, we're kind of at the mercy at whatever banks are willing to offer at any given time. Sometimes they will offer the clients better terms, sometimes they won't. But the reality is the service usually sucks at the bank. So that's where we'll continue to win. And there's a certain point at which people will pay a certain price. They'll go really cheap. But once the service is below a certain bar, they will just leave. They will just leave and they will go somewhere else, at least the vast majority of people. And so I think looking into 2025, one of the biggest trends as it relates to renewals is going to be terrible servicing for the banks, and the banks dropping the ball and probably not offering competitive terms to everyone because they don't have to. They just don't have to anymore, and they're going to be more focused on credit than ever before. Now, one of the other things that we talked about here in terms of implications, and I'm not going to give predictions yet because I think predictions are going to be tied into this next episode that we're going to talk about, but the implications of the changes like the CMHC rule changes of the 30-year amortization, the $1.5 million cap, again, for first-time buyers, I think will be significant and more significant than most people think. But what's interesting to note is that insured mortgages themselves still only account for 5 to 8% of the overall marketplace. So while it will be significant for those first-time buyers, I don't know that it will be significant for all buyers overall, meaning the overall marketplace will probably not see a significant shift because of that, but those people who are using it will most likely benefit quite significantly, if that makes any sense at all. Now, kind of wrapping out the end of 2025 or 2024 and thinking about some of the other changes. I mentioned this earlier. We talked about the fact that the CMHC guidelines have come into place where we can do uninsurable switches and insurable switches, which basically means you can switch your mortgage from one lender to another once it's at maturity, as long as the amortization remains the same and the loan remains the same, except for one big problem. Because of the lack of clarity around the switching and doing it without a stress test, because that's the big part of this whole thing. Many lenders, and we've already seen some of the big banks already walk away and say, no, we're not going to be a part of this. We have no interest in being part of this. It's too vague. It's not clear enough. And the concern that I have is that more and more of these lenders are actually going to start to take this approach where they're going to say, no, we don't think this is clear enough. It's too vague, and we're not going to use the stress test rules. So while there was a good idea to eliminate stress tests for those people that could qualify on the fixed rate loans and make the switch, and I think that would help a lot of families have more competitive options, it's sad to see that the rules have been so terrible, and there's been no consultation of the mortgage industry, such to the point that these banks and lenders are basically backing out and saying we won't do it. And so it'll be interesting to note as to whether or not there will be any reconsideration of these rules, if any of these lenders will come back to the table, or what's going to happen as we look forward into 2024. Some of the lessons for 2024 that I think we learned that we can look at, because again, it's all about trying to figure out some of the lessons here. Number one, well, home buyers, they benefited more than anything else. I think if you look back, 2024, no matter what anybody thinks, I mean, obviously there's going to be some markets that are going to continue to collapse, but I believe that home buyers who purchased properties in 2024, if they look back 3, 5, 7 years, they're going to say they were very happy they purchased in this marketplace. In addition to that, home buyers won this year. Listen, they got increased amortization schedules. They got higher cap limits on CMHC, lower or reduced transfer taxes. Like first-time buyers were really the winners this year, no doubt about it, even despite affordability being incredibly low. Investors, looking at the marketplace, what did investors, I'm not saying they won, but if you look at the marketplace, investors have really had to figure out how to adapt in 24 as the multifamily market has been flooded, as we see the anti-flipping taxes, as we see markets like BC and Ontario continue to be very investor unfriendly. They continue to look for markets like Alberta, or even just leave the country and go to Mexico and go down to different places in the United States. I think one of the lessons we learned from 2024 is that the investment market is ever evolving, and you have to have a long play, but you have to be willing to adapt. And if you're not willing to adapt and find opportunities, you won't do well. But I will say this is, there are always opportunities if you're willing to look for it. And the other conclusion for me was that in the end, despite the fact that the first half of 2024 was absolutely brutal to renters with continued high rents, there has been a significant rent relief, and I think that will continue for the first half of 2025. Beyond that, I don't know, but I think renters will win out in 2024 and into 2025 with lower rents and more rules and guidelines that are in their favor. Hopefully, we see a more balanced government in the future as it relates to these rules, but we'll see. Now, I hope that gave you a little bit of a recap. There's so much more I can go on as we get into 2025. Remember a few things. Now, if you're getting into the real estate market, there's a couple things I want you to remember as you get into 2025. Number one, as I mentioned before, the market just continues to evolve, and it evolves faster than ever. But fundamentals of real estate and finance continue to remain the same. If you walk into buying a property or an investment without a clear strategy, a clear exit plan, a clear plan of attack of your pay downs or your costs, then you are going to continue to pay too much money, no matter what your rates are, no matter where you buy in the marketplace. That has been my primary and number one focus, and will continue to be, whether it's on social media, on YouTube, or if you're working with me and my team as a client, is to continue to show people and educate them about fundamental strategies of money and wealth and real estate and mortgages to stop giving away so much money. So if you found the podcast helpful, if you found the YouTube helpful, if you are looking into real estate in 2025, send a DM to my team. Go ahead and jump on our website. If you are looking into real estate as one of your goals for 2025 or investing, send me a DM. I'll hook you up with our first-time homebuyer guide if that's you. Or if you're an investor, we've got a great 70-page booklet breaking down investments. But moreover, if you're looking for sound strategies, continue to watch these videos. Give me a thumbs up, leave a rating, leave a 5-star review on Spotify or iTunes while I continue to make sure to dig into the topics that are important to you. Thanks for listening, guys. Have a fantastic rest of your year, and Happy New Year. That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.